Here's the only chart you'll ever need for Bitcoin because it just highlights all of these specific phases in a Bitcoin market cycle. We'll be talking about each of these market cycles and each of these phases across time just to understand better what lays ahead for Bitcoin going forward. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and let's dive right into it. Let's start off with this first market cycle for Bitcoin. If we just segment it into three distinct phases, we'll notice that we have a bear phase of 365 days of downtrending in Bitcoin's price action. And this actually happens to be the case across all cycles. It's always the case that we see a year of downtrending price action before we finally see a bear market bottom. And it's once we see a bear market bottom that we emerge and enter a accumulation phase where we simply see price macro consolidate. So it's this sinusoidal price action where we just zigzag a bit for multiple months at a time before finally enabling a uptrend. But it's this uptrend that isn't the parabolic uptrend per se, but it is an accumulation period where we see periods of delicate upside price action, lots of consolidation definitely, but it's uptrending price action that's supposed to enable the next phase in the cycle. And you can see that accumulation takes different shapes and sizes. So for example, back to this 2011-2013 cycle, we see uptrending sideways for a long time and then another uptrend before sideways for another long period of time. Whereas here, this accumulation period, we just saw accumulation at the bear market bottom region following a year of downside price action. So all of this price action here, it's been generally sideways, right? So we have sideways overall, but if we really want to get a little bit more specific, this is a sideways range, which then breaks out into another sideways range. So we have two sideways ranges developing to form a general macro range that lasts a significant amount of time. But this is a quintessential sideways range that develops at bear market bottoms, whereas here you have a sideways range which is a little bit wider. So we see a strong rally towards the upside. We see an extended period of downside price action returning back to the same bottoming out area. So as you can see, for example, here you can see zigzagging all around the same regions essentially inside this sort of box. We have the same thing happen here, but these are much wider and much volatile moves. So it's still a macro range, but we see incredible increases in growth and then of course cancelling out of those growth digits, to revert back to a period of the range low essentially. So this is the range low and this is the range high effectively. And it's this accumulation period that inevitably transitions us into the bull phase of the cycle where we see parabolic price action towards the upside. In 2013, we had two of those parabolas. The first parabola, the mid-cycle correction, and then the parabola to top off the bull market. In 2017, we just saw parabolic price action take place, and we've seen many corrections of 30% on the way to new all-time highs and beyond. And in 2021, we also saw a lot of parabolic price action, lots of strong pulling back. Of course, corrections are part of the process before finally topping out in the bull market. So let's talk about the cycle we're currently in. We saw a bear cycle of a year take place, accumulation, and this is where it gets interesting because this is the accumulation phase. So this is actually a chart that I shared a few months ago. So this accumulation phase, of course, precedes the bull phase, but just notice where we stopped in this accumulation phase. So it was around this time in the cycle, right, where we were just accumulating here for a long time, a very long time. Just going back to that chart to give you a bit more perspective once again, this was the period in the cycle where we had recovered from the bear market bottom, saw that initial uptrend, and then just consolidated for an extensive period of time before enabling another uptrend and then a period of accumulation and then another uptrend and then another period of accumulation. But we are definitely transitioning slowly but surely into the bull market stage. We're probably already in this bull market phase, but we still have a lot more yet to come. If we think about where we are exactly in this market cycle, then we're probably somewhere around here, right? Because this is where the halving tends to occur. We tend to see a initial lift going into the halving, then a pullback, and then consolidation for an extended period of time after the halving before lifting off to new all-time highs and beyond. And this is exactly what's going on here. This is also post-halving price action before that final bull phase and parabolic price action takes place. Similar here as well, post-halving sideways before parabola. So we are essentially in a consolidation phase going into and preparing us for a parabolic phase in the cycle. And this is exactly where we are right now. Post-halving reaccumulation, which is supposed to transition us into post-halving parabolic upside. And if we think about 2020, then we saw a breakout from the reaccumulation phase, which is this red box, and we saw a breakout into the parabolic phase 160 days after the cycle. We're currently 126 days after the halving, and so we still have over a month or so to go. So 160 days would see us break out in late September. But the reason I put 150 here is because if we look at 2016, for example, then indeed after the halving, it took us 150 days to break out from here. We saw that initial breakout and then we saw a pullback to turn the top of that reaccumulation range into a new support to springboard us to new all-time highs and beyond. So it took 150 days in 2016 to get us to that point. Whereas in 2020, it took 160 days. So anywhere from 150 to 160 days is where we should start to expect a historically recurring breakout from the reaccumulation phase after the halving to transition us into a post-halving parabolic upside phase. So it is interesting to note that we're 126 days after the halving, and in 2016 we were near the range high of the reaccumulation range, so we were just creeping below it for a good few weeks. So by standards of 2016, then definitely we're lagging in that respect because we're nowhere close to the range high. In fact, we are just trying to reclaim the range low at this point in the cycle. But if we talk about 2020, for example, then we're very much on target essentially, because we are in the range low area in 2020 here as well. So in 2020, at this same point in the cycle, we were maintaining the range low as support. Granted, this was the range low in this second range, having broken out from this initial range. But generally, the way I think about it is that this is generally one macro range in the same way that this is one macro range and that this is one macro range. So it's really important to just understand that technically we are in a very similar price predicament at this same point in the cycle to 2020 rather than 2016, although 2020 is kind of in the middle of the range, and the middle of the range for us at this moment in the cycle would be 65k. So we are a little bit short from that. So the main summary here is that based on 2016 and where we should be in the cycle, according to 2016 says we should be at the range high. Of course, we're not because we're just at the range low. And in 2020, well, 2020 is suggesting we should be in the middle between the range low and the range high. So we should be at 65k and we're at 61k. So we are lagging more relative to the 2016 cycle and lagging less, but still lagging relative to the 2020 cycle. But most of all, it's important to note that we're not lagging in the cycle overall because we rallied to new all-time highs prior to the halving for the first time ever. And the thing to note here is that usually we'd rally to new all-time highs only 214 days after the halving. And this has been the case in 2016 and in 2020. Just notice that new all-time highs happened only 214 days after the halving. Let's have a look at 2016 here. New all-time highs only after the halving, whereas we got to new all-time highs a month before the halving. So us being 122 days after the halving right now, consolidating around old all-time highs made in mid-March 2024, we are effectively still accelerating in the cycle by almost 100 days, definitely over 90 days. But the main takeaway here is that we are at this moment in the cycle around the halving This orange circle just showcases to us that we are preparing for a bull phase. If we're looking at each of these phases, we do see pulling back after the halving, we do see consolidation and then upticking after the halving. Here, 2020, pulling back going into the halving, and then pulling back also after the halving, consolidation before that parabolic rally. We're now consolidating for 6 months now, and it's leading us to a parabolic phase in the cycle, which is why this is the only chart you'll ever need, because we are finishing up this accumulation. We've already begun the first part of our bull phase. We're consolidating like we've seen consolidation in the first part of the bull phase. Every single time in every single cycle, we've seen consolidation after the halving, but that enables the next parabolic uptrend. That's exactly what we're waiting for right now. That is what lays ahead in this cycle. So having enjoyed the first portion of the bull market, now we're going to enjoy the next parabolic shift in the cycle. And that may very well be, according to historical tendencies, that may very well be 150 to 160 days after the halving, which takes us to late September, maybe early October. But we're really running out of time in terms of bargain buying opportunities below the reaccumulation range low. Lots to look forward to in terms of this parabolic phase in the cycle where we will break to new all-time highs. It's just a matter of time rather than if. Thank you so much for watching today's video. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and I'll speak to you in the next one. Speak to you soon.